Good morning and welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Yesterday we had a great rally coming through on Dalal Street. But this morning the GIFT Nifty is hinting at muted cues. Let's see whether we sustain the momentum or whether the bulls take a pause in today's session. We have a lot lined up over the next 1.5 hours. Of course, viewers, don't think that we have forgotten your queries. We will be taking them up with our experts today. So keep your queries coming in. We'll get them addressed, in the course of the show, anywhere between 8:45 to 9:15. So keep them coming. We will take stock of them in today's show as well. But before moving any further, quickly take a look at the top headlines. Broad-based sell-off on Wall Street as investors rotate out of technology. The S&P 500 slips nearly 1%. The Dow Jones drops over 160 points, while the Nasdaq plunges close to 340 points in a tech-led retreat. Roughly $300 billion wiped off software and data stocks after Anthropic unveils a new AI automation tool, stoking concerns it could disrupt the core businesses of data and information services firms. Indian IT names feel the heat, with Infosys and Wipro ADRs sliding over 3% apiece. Asian markets open largely lower, tracking overnight losses on Wall Street amid a tech-led pullback. The GIFT Nifty signals a subdued start for our markets. Crude oil prices extend gains as geopolitical risks resurface after the US downs an Iranian drone. Gold continues its upward march, breaching the $5,000 an ounce mark as investors seek safe havens. India has secured the best deal in the neighborhood with the United States, says Commerce Minister Piyush Goyal, adding that a joint statement will be released shortly. US Trade Representative Jamieson Greer calls it an exciting opportunity for both the nations. All right, before we bring on board our guests for the day, quickly take a look at the cues for trade today. As I was mentioning in the headlines, Wall Street ended lower. That was largely due to a tech-led sell-off. Tech companies or AI-related names have been seeing a sell-off since the start of 2026, and that continued. But yesterday we saw the Wipro and Infosys ADR dropping as well. And what was the reason behind it? Well, Infosys and Wipro, as I mentioned, ADRs cracked anywhere between 3 to 5% after Anthropic released a new AI automation tool that investors worry could eat into much of their core businesses. Now, Anthropic released a new AI automation tool, and this has created fear that it could eat into the core businesses of tech, of data and information services firms. Anthropic included a legal tool on its website that it says it can automate work like contract reviewing and legal briefings. Now, all output should be reviewed by licensed attorneys according to the website. But this is something that has led to fears, especially for the BPO firms, right? Outsourcing. So, Indian IT, let's see whether or not, we would see a rough session for IT, and could that, drag overall sentiment as well? Because yesterday, we did, hit that 26,000 mark, but we couldn't really sustain about those levels. Even then, we saw the biggest single-day gain coming through on the Nifty since the 12th of May last year. Of course, the US and India trade deal, that's something that fueled a sharp up move. In fact, if you look at the BSE listed companies, they saw a market cap gain of over 12 lakh crore rupees in a single session. All of the sectors were trading in the green, and they rose anywhere between 2 to 5% apiece. As many as 47 out of 50 Nifty stocks ended higher. Export-led sectors, of course, textiles, shrimps, chemicals, all of these, names saw very good, or in fact big moves. Some of them, of course, locked in upper circuit as well, 20% kind of move on some of these stocks. Market breadth was extremely strong. The NSE advanced decline ratio came in at, was at 6:1. So that's heartening. And another heartening thing is that post the signing of the deal, we saw FIIs coming back. Because FIIs were net buyers to the tune of 5,200 crore rupees in equities yesterday. In fact, this was the highest FII buying figure in the last 3 months. Domestic institutional investors continue to remain net buyers as well, and they bought shares worth 1,000 crore rupees in the cash market. And talking about the currency as well, the currency managed to outperform Asian peers. In fact, it clocked its biggest single day gains since December 2018. And another cue to watch out for would be the RBI policy meeting. It kicks off today, the 3-day MPC meet. The outcome, of course, will be declared on Friday. So that's something that one needs to watch out for. In terms of key earnings today, Bajaj Finserv, Trent and Apollo Tyres, these would be the key ones to watch out for, and we will have some earnings reactions as well. Bajaj Finance reported numbers post market hours. We'll take stock of that as well. But let's move on and get on board our experts for today to understand the trade setup. What are the Nifty levels to watch out for? What are the trades one should be taking today? Joining me right now is Jatin Gedia, VP Technical Research at Teji Mandi, and also joining me is Gaurang Shah, Vice President, Geojit Financial Services. Gentlemen, great to have you on the show this morning. Yesterday was a great day. Jatin, we did clock in that 26,000 mark, but didn't really, manage to hold on to those levels. But on the other hand, you had the Nifty Bank Index that managed to hit a fresh record high. So what should be the trade for today? Going long on Nifty, Nifty Bank, and in terms of levels, what would you watch out for?
Good morning, everyone. So, we believe that since the last three trading sessions, we have a pretty wide range on the Nifty and Bank Nifty. So, the ideal scenario that we are watching out for is to the Nifty slips or the Nifty consolidates at the support juncture. Now, the crucial support juncture for the Nifty is placed at 625 to 25 500. So we have the 20-day moving average. Along with that, we have the 50% Fibonacci retracement level of the rally that we have seen from the budget day low to yesterday's high. So that is coming around that 25 625 to 25 500 mark. So I'll be looking out for going long opportunities in the case of Nifty around that support zone. On the upside, the initial level that we believe that is expected is 25,870, and above that 26,000. So these are all positional levels. Intraday, I believe that because of this IT thing overnight, we might just see some subdued opening on the Nifty, and that I think will help the Nifty to inch towards its support zone. So I'll be looking at buying opportunities at the support in the case of Bank Nifty. The Nifty for the Bank Nifty, I believe that the crucial levels that to keep in mind is 59,700 to 59,500, where we have the 20-day moving average. So yes, we are looking at buying opportunities on dips.
Buying on dips, that's the strategy one should adopt. But Gaurang, let me come to you. Last few days, as Jatin was also mentioning, has been quite wild, right? We saw that big move on the downside on budget day, and post that we had the trade deal coming through, and we saw a big up move on the upside as well. A lot of strange things are happening in the market in terms of market moves. But what's your sense? Budget, in terms of budget, of course, that STT hike, came in as a rude shock or a big disappointment. But now, of course, trade deal has managed to lift sentiment. How are you viewing these developments, and what does it look like? Yesterday's move, do you think it was just a one-day wonder, or would you say that now, much of the downside is has already played out? And of course, in terms of upside, what would you really watch out for if that's the case?
Thank you so much, Nandita, for having me on the show. Good morning to all the viewers of CNBC TV18, Moneycontrol.com, to you and to your entire team. A small disclosure, Nandita, we might go into stock specific also, that all recommendations that I'll be sharing with you this morning are a part of our fundamental research team recommendations from a long-term point of view. Our company Geojit or myself, we do not have any kind of investment interest, no financial interest, no conflict of interest either, but we give similar advice to our clients. They might have their investment interest. So I think, Nandita, look, we were in conversation on the budget day also on 1st of Feb. My view was that don't have over expectations on the budget, specifically anything to do with capital markets. Whether it is reduction in STT or whether it is reduction in long-term capital gains tax or any kind of changes in the short-term capital gain tax, I think that was not reasonable enough to expect that. And I think whatever has come in form of small or maybe a large change in form of 0.02% to 0.05% in the STT, maybe it's a thought process and the wisdom that we'll have to leave it to the finance minister and the Ministry of Finance and the entire team as to why it was done. But expectation was built up to a great extent. A lot of people were saying to attract FIs, Finance Minister Srimati Nirmala Sitharaman ji should cut long-term capital gain tax. Look, Nandita, doling out these kind of benefits or incentives is not a long-term kind of a solution. I think if FIs have to come to India, they should look at the macro and micro data and then come. So I will leave it up to them. And as far as the budget is concerned, I think it was the 13th budget of the current government and the 9th one from the current finance minister. Momentum in terms of continuation process has been kept in mind, and I think whatever has been done is medium to long term benefit to the entire economy. So I was not at all disappointed. I think the market got overreacted to the statement of STT, and then we recovered, of course, on the budget day also. And then yesterday, I beg your pardon, we had the late night announcement on Monday late evening, and yesterday, I beg your pardon, had the recovery in the market. We cooled off from the higher levels. I think we should possibly consolidate over here. What I was reading this morning, one of the reports said that the detailed contours of the deal is going to be announced in the next 2 to 3 days by both the counterparts, that is India and
Yes.
US respective representatives, and I think we'll possibly interpret it and then possibly take it forward. So for now, I think yesterday's euphoria was good, but I think we should possibly consolidate over here.
Okay, we should possibly consolidate. What about IT? It is in news, of course, that news flow in terms of Anthropic. ADR saw a knee-jerk reaction. Gaurang, what's your sense? Do you see that kind of a move play out in today's trading session? And could IT dent sentiment here today?
Again, short term, very difficult for me to comment, Nandita, but I think on the fundamentals, we've always been positive on IT. And I think whatever announcements were made in the budget also were productive enough in terms of long-term positive outlook for the IT sector. Now, because of what has happened in the US in terms of Nasdaq and the correction thereafter, there might be a little bit of pressure, maybe today, tomorrow on the IT pack. But notwithstanding short-term or medium-term volatility, long-term we remain positive. We've got investment ideas across IT, that is small cap, mid cap, large cap, across IT. To give few names, Science Limited, KPIT Tech, mid to large cap, we have positive coverage on LTI Mindtree, L&T Technologies, all the four big boys in the IT pack, Tech Mahindra, HCL Tech, Infosys and TCS. And more importantly, Nandita, I think from the second quarter and whatever we've seen in third quarter, the management verbatim was very strong in terms of how the business outlook for the future, and more importantly, taking the next step forward for data centers or AI. I think that's going to be a big change and a positive driver for the earnings for IT company from a long-term point of view.
Okay, the data center push could be, a positive, could bring about a positive change for IT going forward. But Jatin, anything on your radar when it comes to IT names? If at all we see, IT names take a hit today, what would your trade be?
See, I believe that taking overnight cues from the ADR movement, we believe that today's price action might be a little subdued. We might just see a subdued opening and thereafter it might recover. But I believe that I will not be a buyer in the IT at current levels, even at lower levels. I'll wait for a couple of days for this thing to play out and wait for the stocks to stabilize. It will be very difficult to give out actual names, but I think Tata Elxsi is one stock that we believe can withstand this fall. Technically, it has witnessed a trend reversal on the daily charts. It has broken out of a falling flag pattern. So believe that Tata Elxsi would be one name. If I have to buy in this fall, that would be one name.
Okay, okay. Just hold that thought, gentlemen. We'll come back and talk about specific stocks as well. But just want to take a look at all the stocks that would be in focus today. Starting with Bajaj Finance, reported numbers. Net profit was down somewhere around 6% or so. Net interest income, although, came in higher by over 20%. Gross NPAs, came in at 1.2% and net NPAs stood at 0.47. Of course, the profitability was impacted by higher provisions and loan growth remained strong, and even customer growth, was pretty strong for Bajaj Finance. Pidilite is the other one that would be in focus. Net profit grew somewhere around 12%. Revenues saw double-digit growth of 10%, and EBITDA was also up somewhere around 12% or so. Margins came in higher at 24.1% vis-a-vis 23.5% or so. Kansai Nerolac, that also reported numbers. Although profit growth was fairly subdued. In fact, 82% cut in terms of profits. 82% down. That was the net profit growth for degrowth for Kansai Nerolac, and the revenues were up somewhere around 3% or so. Margins also came in lower at somewhere around 11.6. Vis-a-vis 12.2. Of course, labor court impact also played out. That was somewhere around 45 crore rupees or thereabouts. Mankind Pharma was the other one. It will be in focus. Net profit down 7.5%, but margins here managed to stay. The company managed to stabilize its margins as well. Revenues are up 12%, and if you look at margin, that was at 25.8% vis-a-vis 25.5%. So yes, some bit of margin improvement there, stabilization coming in. Aarti Drugs will also be in focus as net profit grew almost 10% and revenue growth stood at 8%, and margins, however, came in lower at 9% vis-a-vis 11%. Jatin, I was talking about the Bajaj Finance numbers. The stock was fairly upbeat yesterday, up 6% or so. There was a slight disappointment in terms of profit growth, but loan growth is strong, NII growth is strong, and even customer growth, customer additions, that has been pretty strong for Bajaj Finance. Anything you do here, because the stock is sub 1,000 levels, but it has staged a good up move in the last 5 sessions or so. We've seen some traction, and yesterday, of course, it was fairly upbeat. How would you look at the stock, and what should you do with it?
Yeah, see, in the case of Bajaj Finance, it has able to sustain above its multiple hurdle zone, which was in the range of 940 to 950. So we had this falling channel upper end. Along with that, we had the 20-day average, which was acting as a resistance. So the stock has managed to sustain above these crucial short-term resistance levels. And now we are expecting a move towards 990 to even 1000 on the upside. So yes, we can expect the positive momentum that was there in the stock yesterday to continue. In case of a decline towards 940, 950 odd levels, again, I would be a buyer at declines as well. So it's a long from our end. We should keep a stop loss at 924 odd levels, and on the upside, we should expect 990 to 1000.
Okay, 990 to 1000. Watch out for that four-figure mark on Bajaj Finance going forward. But Gaurang, coming to you for a Pidilite, profits were up somewhere around 12%. It did benefit from lower input costs, right? Any thoughts on how you would look at this particular counter, in terms of the future earnings trajectory, looking at numbers, and would it be worth a buy?
So, Nandita, disclosure that we do have a positive coverage on Pidilite. Again, not only the numbers, but actually if you go to see the monopoly kind of a situation when it comes to certain power brands that Pidilite has. And of course, along with that, other products. And input cost coming down is also a big positive in terms of profit margin. If you have it, you can definitely hold on to it. On fallback of the numbers, maybe you might see a bump up. Don't put all your money at one time, but staggered buying is something that we will definitely advise. Start at current levels, and on dips you can continue to add to it. The second thing is, I think all these specialty stroke agrochemicals stroke adhesive companies and sector looks very, very attractive post the announcement of the India-US trade deal. Of course, like I mentioned, and you also said, we have to yet to understand the contours of it, but I think it will definitely be very, very productive. So Pidilite, hold on, and you can definitely add as well.
Okay, staggered way. You can buy the stock in a staggered way. But what about Kansai and Nerolac, Gaurang? Howler set of number, at least looks like that to me. There was marginal revenue growth, but we saw the profit tumbling over 80%. How would you look at Kansai Nerolac within the paints basket?
So I would give it one more chance, Nandita. Again, we have a positive coverage on Kansai Nerolac as well. It's, I think, one of the third largest paint company in India, if I'm not mistaken, and I stand to be corrected. I believe in one particular theory, Nandita, that any company belonging to any sector can undergo pressure for maybe 1 or 2 quarters for reasons known unknown, and of course the headwinds that that particular company may face. So my advice is that don't look at 1 or 2 quarters and change your long-term strategy as far as investment is concerned. There are times when companies have reported disappointing numbers, but then in the quarters to come by, the strategy has been put in place and there is significant improvement as well. So yes, 82% downtake, something definitely has hit them very badly. But on the flip side, if you look at the revenue, there is marginal uptick as well. I would say continue to hold on, and because of these numbers, if you see a downtake today, tomorrow, it will be good time to average and possibly add, and maybe a fresh investment also will be advised.
Okay, good time to average and add, and maybe a fresh investment as well. But on the technicals, what are your thoughts, Jatin? Because if I look at the charts of various time frames, all I can see is red on the screen. Any chances that the stock would change color, or would you also advise averaging? What are your thoughts?
Yeah, see, in the case of Kansai Nerolac, the trend has been pretty negative, not for just a short term, but from a medium term perspective as well. If I see the monthly charts, it is all in the red, as you pointed out. So I won't be a buyer in this counter. The only positive that I can find out here is that once it crosses around 240, 250 on the upside, that would indicate some kind of a near term strength, because we have that 20-week average around that level. So just only about 240, 250, I would be a possibly short term up move towards 265, but at this point of time, it is a clear cut avoid.
Okay, at least on the technical side, it's a clear-cut avoid for now, Kansai Nerolac. But before I come to the trades for the day and Gaurang's compounding idea, I want to get in your thoughts on a trend, Gaurang, because that stock, 2025 was I don't even know what word to use, because 2024 it was a showstopper stock, right? 2025 completely washed out, and numbers are today for trend. Do you think there could be any levers that could drive growth for trend going forward? What are the issues? Any kind of pullback on the cards, because the stock has really underperformed in 2025.
Yeah, from a star performer to an underperformer. That's the stark difference, Nandita, for Trent. And having said that, I think, we did hear the management verbatim in terms of cautious earnings outlook because of pressures. On the flip side, they have maintained their new store opening run rate not only for Trent but also for Zudio, and that should possibly add over a longer period of time. Again, a disclosure, we do have a hold recommendation on Trent. I think short to medium term, the stock may possibly tend to move sideways or underperform. But I think once you have the run rate upping in terms of number of stores getting added for Trent as well as Zudio, the contribution will start coming in. It won't happen immediately, Nandita, we all know. Once the store is opened, it takes some time for the store to start contributing. So long term, we remain still positive on trend. Whether to add at current levels, I would suggest wait out for some time and look at the business outlook and update, and then take your step forward.
Okay, at the current moment, it's a hold, and perhaps wait it out. If you haven't really entered into the stock, wait it out before you make an entry. Assess things a bit, and of course, numbers are coming out today as well. Just want to hold that thought. Just want to see what the markets are doing at the pre-open. The Nifty is showing 180 points, about a 180 point cut, but now it's 60 point cut. So yes, let's wait for things to settle down, but it looks like we are poised for a negative start on the last street today, as was the case with the GIFT Nifty. That's already hinting at a lower start. But in the pre-open, look at all these technology names: Infosys, HCL Tech, Tech Mahindra. All of these stocks are down anywhere between 2 to 5% apiece. Infosys being the biggest or worst hit, 4% down. HCL Tech 3%, Tech Mahindra 2%, and Wipro down 1.5%. So yes, looks like it's going to be a rough session for IT names at least. But on the upside, you have some names like Kotak Mahindra Bank doing well, Sun Pharma, SBI Life, Nestle, Jio Financial, Adani Enterprises. Adani Group stocks, of course, were big winners in yesterday's session, and today looks like they are set to extend their gains as well. At the current juncture, the Nifty in the pre-open session is down around 18 points or so, and the Sensex is down somewhere around 350. We'll wait for things to settle down, and of course, we'll take stock of how the markets open at 9:15. But let's come to the trades of the day with Jatin. Jatin, what are the trades for today, and any particular sector stocks that one should keep on their radar?
So we would like to recommend two trading ideas for today's trading session. The first one being Petronet LNG. On a longer term time frame chart, it has witnessed a trend reversal. Weekly charts, it has started to form higher tops and higher bottom. The recent correction halted exactly at the 61.8% retracement level, and since last couple of trading sessions, we are having a good formation on the chart. So Petronet LNG is our first recommendation. We should place a stop loss at 288, and on the upside we are expecting 315 in the case of Petronet LNG. Another recommendation that we have is Max Financial Services Limited. So in yesterday's trading session, it broke out of a falling channel, sustained above its 20 and 40-day moving averages. So I'll be expecting the up move to continue over the next few trading sessions. So MFSL is a long side idea from our end. Stop loss should be placed at 1640 on the downside, and we are expecting levels of 1720, 1725 for MFSL. So Petronet LNG and MFSL are both long ideas for today's trading session.
Petronet LNG and MMFSL, those are the long side ideas from Jatin. But Gaurang, before I come to our viewer queries, let's get in your compounding idea of the day. Of course, it's not a very short term kind of a pick, something that has the potential to be a wealth creator. Share your compounding ideas with us.
So I think there was a decent amount of budgetary allocations towards the defense and Nandita. So I'll give you two investment ideas from this defense related pack itself. First one is a company called MTAR Technologies. Phenomenal set of numbers, beyond anybody's expectation. They reported stellar set of numbers, MTAR Technologies. And the second one is a government owned company called Bharat Electronics Limited, BEL. Both these names with respect to defense have performed extremely well, and after the initial fall post that budget day disappointment, both these stocks have recovered. So I think the strategy is, and again, both these are long term investment idea, Nandita. So start at current levels and you can slowly accumulate it and have at least 2.5, 3 year plus kind of time horizon. If you really, as you rightly mentioned, compounding investment ideas could be a great strategy.
All right. Okay, those are the compounding ideas from Gaurang. But let's take stock of our viewer queries. We haven't been able to do that for quite some time because of so much news flow in the market. But let's get them addressed today. Since we're talking about defense, I want to take up a query that's come in from Komal Makecha. He has a query on Bharat Electronics for fresh entry for the long term. Of course, Jatin, I would like to come to you for that. Defense stocks had already seen quite a bit of, an up move ahead of the budget. Of course, budget day things changed. We saw, a lot of sectors and stocks, ending in the red and, seeing deep cuts as well. But of course, due to high allocation on defense, there's a lot of interest in some of these stocks. For BEL, if somebody wants to get in right now, would this be a good time?
Yeah, see, in the case of BL, ahead of the budget, we had this breakout from a 6 month consolidation. The upper end of that range was in the 420 to 425. So I believe that whenever this breakout gets retested, that would be a point wherein one can, buy some quantity. So 420, 425 is the range around which I would advise to buy from a long-term perspective. Again, keeping in mind 390. So 390 is the 200-day moving average that I will place as a stop loss for my investment that I'm making at 420, 425. On the upside, I'll be expecting a up move towards 560. So this target that I've achieved of 560 is purely on the basis of the range of consolidation last 6 months that I've added to the breakout level. So on the upside, from a medium term perspective, 560 is the target. I'll try to buy it around 420 and place a stop loss at 390.
Okay, that's the view on Bharat Electronics. Hope that answers your query, Komal. Naveen, we've already spoken about Bajaj Finance at the start of the show, so perhaps you could rewind the feed a bit and check his answer, Jatin's answer on that. But there is a query on ITC as well. The gentleman here saying that his average cost in ITC is 369. Should I sell and book losses? Post the excise duty shocker on New Year's, we've seen a lot of these cigarette makers, including ITC, take it on the chin. What is the case here, Gaurang, for cigarette makers? And if one wants to exit, should one do it now, or should one continue having the faith and hold on to it? How should they navigate, especially for ITC?
So, Nandita, look, people look at ITC as only a cigarette or a tobacco product related company. That is not the case. They hived off their hotel business and listed as a separate entity, which is doing extremely well. Other than the tobacco and cigarette business, they have other businesses which have started to contribute to a great extent. The issue is the overhang and the correction. Now, with respect to this price hike, with tobacco and cigarette, large part of the negativity is already there in the price, because we saw the stock correct from, I think, 380, 360 odd levels to 310 odd levels, or maybe 300 odd levels. Impact of this price hike will be known in the fourth quarter in the next financial year. But like I mentioned, other businesses have also started to do well, and because of this overhang, I think the management will draw down a strategy to have a clear focus in other businesses and how they could contribute more to the top line and bottom line. I would not say you can exit the stock because we have a positive coverage on ITC. It may be a little bit of longish kind of an investment given the headwinds with the news flows, but I don't think you should book your losses. Have patience, stay invested, and if you have investable amount, since you got in at 360 or 370 odd levels, if you get it somewhere close to about 300 or sub 300, you can average as well.
Okay, keep the faith in ITC. It's not just a cigarette or tobacco maker, it has other businesses and they are also doing well. That's the advice coming in from Gaurang. But let's talk about some other queries as well. You talk about textile makers, of course, after the deal has come through, right? Because these were the ones that were the most impacted, especially since April of last year, right? But then we had the mother of all deals, which is the EU deal, and then we had the father of all deals, which is the India-US trade deal. So now, what would you do with some of these names like Gokuldas Exports? Because there is a query, Nikhil Kataria has sent in a query, wants to know, in fact his entry price is 766, wants to know, does it make sense to hold, especially post the trade deal news? What would you say? Of course, some of these stocks rallied anywhere between 15-20%, some of them were locked in upper circuit. Stock is quoting at 780 almost. It's time to stay put and perhaps get set for a mega up move going forward, at least in the next couple of weeks.
For the mega up move to come in these sectors or companies, Nandita, will have to wait for 2-3 days, right? We don't know the details yet, and as it was elaborated by Minister Goyal yesterday in his speech with respect to the India-US trade deal. So I think, and it was a counter reaction, right? When the tariffs were announced, these stocks were down 5, 10, 15, 20%. And now with this clarity coming in, clarity in terms of the deals going through. We don't have the clarity in terms of the contours or what the deal has the details in. So we have to wait it out. Unfortunately, we don't have coverage on Gokuldas, etc. But we do cover stocks like Avanti Feeds, Apex Frozen Food. We have coverage on Bharat Forge. We have coverage on certain specialty and agrochemical companies. We have coverage on gems and jewelry like Titan. So I think you need to wait it out. Don't jump the gun. We've seen the euphoria yesterday. Let us have a little bit of more clarity, understand what is there in the deal, and then plan the strategy.
Okay, that's a fair advice. Fair point, really. One should really wait for the contours of the deal to understand how things have panned out, what are the sectors, what are the rates, etc. So yes, before taking a decisive action, I think one should really wait it out, and that's what Gaurang is also seconding. But there's another query that's come in from, I think it's on Poonawalla FinCorp. Wants to know, I don't get the gentleman's name, but he wants to know whether it's a good time to enter. And if yes, should I look at a longer term horizon? Poonawalla FinCorp has come off quite a bit in the last month or so. It has shed somewhere around 15% or thereabouts. It's way off from its 52-week highs of 570 or so. But is it an opportune time to get into this stock? Do you think the correction offers an opportunity?
Nandita, I think if you really want to go into NBFC space, of course on Poonawalla FinCorp we don't have coverage, so I won't be in a position to give you any specific. But there are better investment themes and ideas, and these stocks, Nandita, have actually made their new all-time high. So you have names like L&T Finance, you have names like Mahindra and Mahindra Finance. I think if you want to stretch it out a little bit more, then one stock which was in the news for all the good reason, for mother of all deals in the financial sector, is Shriram Finance. I think these names are better compared to Poonawalla FinCorp. So if you're not invested in Poonawalla FinCorp and if you're looking at investing in NBFC space, then these three names would be preferred investment ideas.
Okay, so look at bigger names, the likes of Shriram Finance, if you want to really look at the NBFC space. That's the call from Gaurang. Just one more query to go. In fact, I think two more queries, and we have 2 minutes to go for the markets to open as well. So let's take them quickly. Any view on DOMS? Pannu Anil wants to know whether it's worth an investment right now.
Nandita, I'm sorry, we don't cover this one.
Sure. Okay, no worries. We will get this query addressed some other day. But there's another query coming in from Nadeem Faiz, and he wants to know your thoughts on Uniparts. I think his buy price is at 530. Would you have a view on this stock as well?
No, Nandita, I'm sorry. Even this is not on coverage.
No worries, Gaurang. No worries. We'll of course, not put you in a spot. We'll get these queries addressed for our viewers from our other experts. But Gaurang would like to thank you for taking out time. Always a pleasure. And I look forward to more interactions going forward.
Thank you. Look forward, Nandita. Thank you so much. Thank you.
Well, just about. Sure, always, Gaurang. Thanks a lot. All right, the first ticks coming in, and it is red on the screen as was being expected. GIFT Nifty was suggesting a lower start, and that's exactly what has happened. We're down somewhere around 0.5% when it comes to the Nifty. In fact, a triple digit cut coming in, 100 points lower, 25,600. And look at the Sensex, that's down somewhere around 440 points or so. But the Bank Nifty deserves mention. It is trading in the red, green, I beg your pardon. It is above that 60,000 mark. Mind you, yesterday the Nifty Bank Index made a fresh high, and today it is trying to latch on to that 60,000 mark. Let's see whether it manages to do that or not, because right now it's a tug of war between bulls and bears when it comes to the Nifty Bank Index. It's trying to keep its head above that 60,000 mark as of now, at least, and I can still see some bit of green on the screen for the Nifty Bank Index. The mid cap index at the current juncture is underperforming the benchmarks. It's down almost 0.5%. Breadth of the market, although, is tilted in favor of gainers. 1.5, 3:2. That's the NSE advance decline ratio at the current juncture. 1,000 advances to 720 declines. So yes, aside of the banking index, I really want to see what the IT index is doing because of the Anthropic news. Of course, we were expected to see some bit of red or some kind of a downtick when it comes to the IT pack. In the pre-open, at least, all these names like TCS, Infosys, Wipro, they were all down 3 to 5%. Right now, it's HCL Tech. That's the biggest loser on the Nifty. That's down 6%. Infosys down 6% almost. TCS down over 5.5%. Tech Mahindra down 5%. Wipro down 5%. So top 5 losers on the Nifty 50 are from the IT basket, and all of them have taken it on their chin. They're down 5 to 6% a piece. So yes, this Anthropic news, Anthropic entering into legal as well when it comes to AI. So that could pose a threat to outsourcing business, and that's why I think some of these Indian IT names have taken it on their chin. Overnight, we saw a deep sell-off in IT names as well, and that's something that's being replicated here as well. And overnight ADRs as well were under a fair bit of pressure. But let's take stock of some of the other sectors then and see how things are panning out. Metals are holding the fort. In fact, metal index is up 1%. Of course, over the weekend, in fact, on Sunday, we saw sharp cuts coming through for metals indices. And, since then, we've seen prices stabilizing. And today, the Nifty Metal Index is the top gainer. Energy is a close second. Oil prices were up overnight. We'll see how ONGC, etc. are doing. But the Nifty Energy Index is up somewhere around 1%. Autos up almost 1%. FMCG up 0.3%. And as I mentioned at the start, banks, they were up marginally, holding on to that 60,000 level. IT, the index per se, is down 5.5%. Of course, 5 to 6% cuts on index heavyweights. That's completely dragging the index down. But aside of the frontline names, let's also look at some of the mid cap names that are taking it on the chin. Persistent is down 6.5%. LTI Mindtree is down 6%. Coforge is down 6%, Emphasis down 6%. It's deep red when it comes to the IT basket. We'll take stock of how to look at IT, especially in the wake of the Anthropic news flow. But aside of that, let's also take stock of some positives in the market. As I mentioned, metals were in the green. ONGC, Nifty Energy Pack is up 1%. So ONGC is up 2%. From the auto basket, M&M is among the top gainers, up almost 2%. From the metal pack, you have Tata Steel, you have Coal India that's doing well. And some of the other names, I'll come to it, but aside of these names, you have Tata Motors passenger vehicles that's doing well. Reliance Industries, that's also trading with gains of 1% or so. So yes, providing support to the index. And as we speak, some of its opening losses, it's down just about 8 points. Let's see whether the bulls can fight back and continue the momentum that we saw in trade yesterday. But on that note, let's find out whether we have our next guest, the market maker, with us or not. Rahul Arora, CEO of Ashika Group, will be joining in to share his thoughts on the market and, of course, the sectors to watch out for. Of course, we've had the trade deal, we've had the budget, we've had the EU deal, so lots to talk about with him. Let's see if Rahul is here. Yes, Rahul is here on the screens. Rahul, good morning. It's been a while since we spoke, and lot of things to take stock of. Particularly the last few weeks have been a roller coaster for the market, right? Stranger things playing out here on TV. Budget day fall, and then we had the trade deal come through just in a matter of a day. Post the budget. What do you make of all the developments in terms of trade deal? Do you think that worst in terms of market movement is out of the way, and perhaps we could move quickly towards higher levels like 28,000, 29,000, or am I being too optimistic?
Morning, Nandita. Thank you for having me on the show. So I think let's look at it in perspective, right? I think what drives the markets? Liquidity, both from domestic as well as from foreigners. I think if you looked at Bloomberg consensus numbers for FY27, we're expecting about, we're expecting about a 12-13% kind of earnings growth for FY27. Now, let's say I'm a foreign investor, and those are the kind of returns that I'm expecting from the Indian capital markets in line with earnings. I'm anyway paying long-term capital gains tax, so that knocks off about 1.5%. So if I'm expecting 12% returns, that knocks me down to about 10.5%. Let's say I knock off another couple of percentage points for inflation in my home country, that pegs me down to about 8.5%. And then you have the rupee depreciation in India, which could be anywhere between 3 to 5%. So you're talking about post adjusting for all this, if I'm an FII coming into the Indian market for returns of post all of these of about 5%. Now I'm getting the US 10-year yield at about 4.5%, which is a relatively safe asset. So what's my temptation to invest in India? I think my temptation to invest in India only comes when I expect 20-25% returns from the capital markets, which would probably come at a time when I think earnings growth probably heads to that 15, 16, 17% kind of number, which I don't think we can say with confidence today that that's going to be the case for the upcoming fiscal year. That same logic can apply to domestics with that 12% number. You only replace rupee depreciation with your local inflation. Add to that, you have fixed deposit rates at 7%. So if I'm somebody who's paying 20% tax on that, I'm getting 5.6% post-tax. Again, what's my incentive to allocate extra to equities at this point in time? And plus, gold and silver have had a dream run over the last couple of years. Yes, they've been pegged back a little bit off late. But the incentive to invest in the markets as of today is not that exciting as it probably was in the past. Now, to your question, I think the movement on the budget day was exacerbated. I think when the trade deal was first announced was exacerbated. And I think the reaction to it yesterday was also exacerbated. Now, the reason for that is when your first reaction is so extreme, the second counterproductive reaction is going to be extreme. So I think all of this is now settled. The dust has settled. I think I'm glad we're now going to just focus on earnings. All the news flow is out. I think that the levels that you're suggesting, Nandita, may be too optimistic this year. I think in a best case, you may hit 28,000. I don't know, but anything above that would be a bit of a stretch. So I think my base case is the Nifty goes to sleep this year between say 24, 25,000 on the lower side and 27, 28,000 on the higher side. But that's not to say you won't make money, because you can long and short. If you're getting a 3,000 point range on the Nifty, there's going to be enough places to make money both sides.
Okay, we'll talk about which spaces to look at when it comes to making money. But let's, you were making a point about, why foreign investors may not look at India as of now till earnings comes back. So yesterday we saw a buy figure come through 5,000, in excess of 5,000 crores. Would you say that was just a short covering rally? And of course, till the time earnings doesn't really come back in double digits, a sustained FI buying is completely out of the picture?
So I'll just lighten the mood a bit, Nandita. I think if an alcoholic doesn't go to the bar for one day, doesn't mean he's given up drinking. So I think, it's too short term to call just basis 1 day or 2 days numbers. Like I said, I think it's going to be a challenge for India to attract foreign flows in the short to medium term.
Okay, it will be a challenge, and we've sobered down a bit, Rahul, because I did a lot of interviews with guests at the end of 2025, and all of them had the view that 30,000 on the Nifty this year in 2026 is a big possibility. But yes, temper it down a bit. That's the message coming in from Rahul. But Rahul, if I were to talk about the portfolio reset.
No, I'm
Sure,
saying
go
on a
ahead, go
lighter
ahead.
note, I think the very same people who keep talking about 30,000 are probably doing that with you every January, every year. I think you probably got tired of listening to them saying the same thing because they'll start off with earnings projections of 15, 18, 20%, and they themselves wind it down. So I think, for every optimistic voice, it's good to have a cautionary
Sure,
voice. And
sure.
I don't think I'm cautioned without reason. I don't think it's right for the benefit of your viewers because you, as an anchor, carry a fiduciary responsibility as well. To just aimlessly come out and keep telling people, "Ha, Nifty 30,000 ho jayega, 30,000 ho jayega." If you can ask them to break it down on why, I don't think most of them would have an answer. With due respect.
Sure. Point taken, Rahul. Cautionary voice. It's always better to be a little cautious. But since you mentioned earnings growth, what is your own expectation in terms of earnings growth for the next fiscal? A lot of them believe double digit is a possibility. Early double digits. Would that be a fair assessment, or would you say that's also far out?
No, I think that's a fair assessment, Nandita. I think 12 to 14%, I think maybe 12, 13% is more reasonable because, just a little earlier on the show, you were talking about IT. I think if you look at frontline IT, right, TCS, Infi, HCL Tech, Wipro, I think these are companies that are going to grow their profits in the upcoming year by anywhere between 8 to 10%. Frontline consumer staple companies will probably grow it by that same amount. So you're basically down to Reliance and banking to help you grow your earnings because between banks, FMCG, IT, and Reliance, that's about 75-80% of your Nifty right there. So I think if you looked at the sectoral deployment of credit numbers that come out fortnightly, Nandita, I think credit growth now has moved back for scheduled commercial banks into that 12% range, which had sort of gone down into the single digits. Retail has come up to about 14-15%. Now, obviously, that has to be viewed in context of the GST rates being cut late last year. But I think banks could be one place where if the bulk of the interest rate cuts are behind us and net interest margins bottom out, I don't think there's been any serious concern on asset quality. Sure, there have been a few blips here or there. But you would remember, Nandita, in the last super cycle that we had for banks, names like HDFC, Kotak, etc., were trading anywhere between 4 times price to book on a 1 year forward. None of them are even trading at 3 times right now. You'll probably be getting them at 2.6 to 2.8 times. So I think there is certainly headroom for banking. I think mid-cap IT could be an interesting place for earnings growth, Nandita. I think that's probably a place where I would look at. Consumer discretionary, hotels, aviation, liquor stocks, I think that could be another interesting place. And selectively, I think in defense, cement, and pharma. I think these are the places that are going to drive earnings growth in FY 27. Of course, you've got a clue of that in the budget because, she's hiked defense spending by about 15-20% on a very high base of about a 55% spending last year. So, and I think the order books are extremely sorted for most defense companies. So, even if a single defense company in India does not win any order from now, they'll still probably grow their revenues by 20 to 30% over the next 3 to 5 years. So these are some of the pockets I think that could be at the front line. And not to forget automobiles, because the auto sales numbers have been remarkable over the last couple of months. Again, obviously, you can argue aided by GST cuts, but I think the numbers have been very strong, and that could be another place where earnings do surprise on the positive side.
Okay, all right. Those are those few pockets to watch out for in terms of a portfolio reset post the news flow. But what about this Anthropic news? Do you today's reaction? Do you think it's a knee-jerk reaction for Indian IT, TCS, etc.? What kind of a repercussion could that have? And how should one approach IT? You've spoken about it that mid cap looks better, but what about these large cap names? We've had TCS also commit quite a hefty chunk of money when it comes to data centers, etc. And some of these companies have been reporting good AI revenues as well, right? So in terms of large cap IT and this Anthropic news, put that into perspective for us.
No, so I think, Nandita, the AI bit that you're talking about, or cognitive technologies, or whatever are the incremental new age technologies that frontline IT companies in India are investing in, that's what's actually helping them get that 8-10% growth, right? I think the bread and butter business is certainly, probably going to be mid to low single digits. So, but like I said, I think let's go back to, even pre the budget fall, right? I think most IT companies in India, let's take the 4-5 frontline ones, were trading anywhere between 18 to 23, 24 times. Now, the question is, for an 8-10% growth, do you want to pay that? There was once a talk that you buy them for buybacks. There was once a talk that you buy them for rupee depreciation. I mean, are these really the reasons you want to buy stocks? If that's the reason you want to buy them, then why not invest in gold, silver, fixed deposits, or other asset classes? Bitcoin and things like that. You want to buy a stock because it's something that's going to grow better than what the market is going to grow. So if I am buying a stock today and the aggregate earnings growth for the Nifty, let's say is 12-13%, I would be comfortable buying a company that's giving me at least 15-20% higher numbers than that, like say 16-18% kind of earnings growth. So as an investor, no one's putting a gun to my head to invest in one sector or the other. But I just think that some of these mid-cap companies that have defined their capabilities early on in their journey, names like Coforge, Persistent, KPIT, I think from a stock price perspective, they may stand a better stead. So I think these news flows will come and go, Nandita. I think the main reason to buy a business is growth and earnings. And I think in that context, I would probably be neutral to underweight IT. And if I was to have a slightly higher allocation, it would be more towards the mid-cap IT. If I just absolutely have to buy a large-cap IT name, I'd probably look at maybe a TCS or a TechM, but that's if I was absolutely forced to do it.
Okay, okay. If somebody puts a gun to your head, these are the names that you would look at from large cap IT. But very quickly, let's also talk about the STT hike, right? That was one key reason why we saw that knee-jerk reaction and a sharp fall on budget day. But post that, what is the potential hit to volumes? And secondly, what would you do with stocks like BSC, Angel One post that?
So I think there are two aspects to this, Nandita. I think obviously this is going to have, it increases the cost of transaction. So there will certainly be an impact, on volumes. Now, what that will be is a very difficult call to take because almost 90-95% of your volumes now are basically coming from FNO, high frequency trading and such instruments. And obviously a lot of it has gone digital through apps like Grow, Angel One, like you said, Zerodha, among others. I think most brokers have today made an investment in some form of digital technology or the other that are providing these services. So to take a call on what's going to happen on volumes is a very tough call to take because the increases have been very sharp. Could it have been handled better? Maybe, but I don't think she's necessarily, as I was telling, one of your sister companies on the day of the budget, I don't necessarily think she's done a wrong thing because, if you look at the SEBI paper, SEBI does say almost 90-95% of the people who are investing in FNO are losing money. So, if the government is doing something to disincentivize that, I don't think they're doing the wrong thing. I think it's just becomes, I think that part of the market has just become so speculative that sometimes someone coming and putting checks and balances in place is not a bad thing. I mean, I personally, as a disclaimer, have never invested in FNO and I don't think I ever will as well because it's not the part of the market I understand. I don't want to get into names, terms like leverage, margin and things like that. Now, if people are getting into it, I think this was a good move from a deterrent standpoint. Could it have been handled better? Maybe. Is it going to have impact on volumes? Of course. Do brokers have an alternate way of countering it? I don't know because let's not forget, Nandita, in a couple of months, we do go into a situation where institutional brokers like ourselves have to deal with the new institutional broking rate of 6 basis points that SEBI also announced. So it's going to be an interesting year for us, FY27, but have a conversation with me somewhere around June and I'll tell you what the exact impact of STT as well as this revised broking rate will be.
Okay, I look forward to that conversation in June. But before that, June is far out. And before that, I'm sure we'll have a lot more conversations on air as well, Rahul.
Yes, it's been that kind of a season, hasn't it? But trying to make the most of it.
Sure, Rahul. Sure. I had a few more questions, but I'll save it for another day. I would like to thank you for taking our time and joining in. Always a pleasure.
Thank you for having me, Ananta. Pleasure. Thank you.
Thank you. All right, before we get on board our next guest, just want to see what the market is doing. Yes, we've taken a U-turn. We started the day on a negative note, but now we are 50 points up on the Nifty, 25,778. That's where we are at. Sensex is also up 90 points. So on the Sensex, we've recovered over 400 points from the day's low. Mid-cap index is just about broken into the green. It's just about 38 points up. Bank Nifty has picked up traction. It's up 200 points. So notwithstanding the drop that we are seeing in IT names, that's quite severe, by the way, 5 to 6% cuts on some of these, IT names. But you have stocks like, Reliance Industries that's providing support because Reliance Industries is now somewhere around 1.5% up. You have ONGC that's up 3% on the back of rising crude oil prices. Some of the auto names are doing well. You have L&T that's doing well. ICICI Bank is also holding out, and providing support to the Nifty Bank Index as well. Lots of other movers as well that we'll take stock of in just a bit. But before that, I think let's shift focus to our segment Beyond the Headlines, where we will be talking about metal prices, how they have rebounded after the crash that we saw in the last few days. All right, to take stock of metal prices, the sharp swings and the major volatility in prices, and how should one approach precious metals, and what should one do? Let's bring on board Chirag Mehta, CIO of Quantum AMC. Chirag, lovely chatting with you. The wild moves on precious metals, it has left a lot of investors nervous and anxious. But we've seen a good rebound as well, right? After the kind of crash that we saw over the weekend. But, how should one look at where prices are headed from here? Do you expect this kind of volatility, the extreme volatility that we have seen over the weekend, to come through again soon? How would you look at the moves, the wild moves on precious metals?
Sure. Thank you for having me today. I think the volatility was called for given the parabolic move that we saw in gold and silver both. So I think it's not a surprise that we have seen the kind of reaction because whenever it was to turn, it was to turn in a similar fashion. So I think what we have seen is first a great move and then a sharp fall in both gold and silver. So I think it was more the last leg of this move that we saw. There was some sort of speculative build-up that we had seen in the prices, and that is where it kind of warranted to correct even at that point in time. So it was waiting for probably some trigger, and the trigger came in form of the new Fed chair announced, Kevin Warsh, who kind of is a hawk, supports low interest rates, but from a monetary inflation perspective, he is a kind of a hawk, and hence gave the market the reason to correct. So I think if you look at overall what we have seen in precious metals, the fundamental reasons why we saw the rally in the first place are still there and are still continuing with us. The forces that propel gold, especially, is still there. Given what we have seen in terms of developed markets with debt and deficits level, which are very, very unsustainable, the de-dollarization play which got exacerbated with the policy making that we have seen in the US. So there are no easy answers to that, and political will is not there to bite the bullet, and hence we see that reaction is what's alternative? Is there any currency that can be and take that vacuum that dollar is leaving for investors globally? And I think there are no easy answers, and that is where you see that that vacuum being filled by gold. Silver is something else. Silver is half industrial, half gold, half precious metal to that extent, and much of it is now incrementally on the industrial side. So you have to see it from a demand supply perspective, whereas gold you have to evaluate as a monetary asset as opposed to being anywhere close to the metals pack as such.
Also, the gold to silver ratio has improved, right, Chirag? How would you, would you prefer gold as a wealth creator or a long-term investment bet, given the fact that, silver is largely high risk, high reward. It's a sprint metal, so to say, but on the other hand, you have gold that's a marathon runner. So, is it better to have a higher exposure to gold vis-a-vis silver? Although silver does give you supernormal returns at one go.
Yeah, absolutely. Silver didn't do anything till 2025, and then there was a sporadic rally that we saw in silver, which caught many attention, and there were a lot of narratives floating around that everything EV, everything sustainable uses a lot of silver, and demand is going through the roof. But if you look at Silver Institute's demand supply data, the aggregate demand, despite investment demand increasing and photovoltaic demand increasing to some extent, on an aggregate basis, the demand was constant over last 3 years. So there was nothing, because these things have been with us for last 2-3 years, which have been incrementally seeing a lot of demand, but aggregate demand of silver had not gone up. Second, if you look at silver as a price of a solar unit, was less than 3% 2 years back. had jumped because of the price increase to about 29%. So that really told you that solar was only operational or only viable because of the cost of solar coming down and now levelized with what conventional energy was costing you, or even lower. With this increase in silver prices, it became unviable from that standpoint, and hence, there was a substitution or technology risk somewhere in the making. So we saw solar manufacturers out of China come and announce that we are switching to copper, and copper works equally well as compared to silver. And copper being so low cost as compared to silver, it was a much viable alternative. So people talk about gold silver ratios, and if you looked at ratio very very closely over long time periods, that ratio has tended to move up. And as it moves up, I think it tells you that gold is becoming more viable or a more preferred asset as compared to silver, which is more used in industrial as opposed to being a monetary asset. So there was a big swing. I mean, it had stretched on the upside. It even stretched on the downside, and probably now it's in course of making a good equilibrium, which will be probably higher than probably where it stands today. So I think from your answer to answer your question, short,
Right.
gold is more a structural play as opposed to silver, which is more tactical play. And if you understand the demand dynamics of silver, then only get into it.
Sure. So the strategy remains the same, buy on dips, because you said the fundamentals are in place for a further up move?
Yeah, I think downsides look limited. You could see where we saw recent lows. From that standpoint, downsides from that level could be limited, and probably, given fundamentals still in place, I think one should use any downsides to their advantage to add more allocation to gold. So I think investors will be aware of, because given silver is
Sure.
a industrial commodity, it gives you similar exposure to growth like your equities do, and hence it does not help you diversify the risk that equities bring to the table. And hence, gold, which does well when equities don't do well, is a better diversifier. So from a portfolio standpoint, gold makes much more sense as compared to silver.
Got your point, Chirag. With that, I'd like to thank you for taking out time and joining in. Always a pleasure, and look forward to more conversations. Since you're saying that there is more upside, we'll keep touching base with you on where these precious metals are headed. Thank you for joining in.
Sure, absolutely, pleasure. Thank you.
Thanks a lot. On that note, let's also bring on board a big market voice. He's been waiting by very patiently. Ajay Bagga, market expert. Ajay, lovely chatting with you. I want to start off our conversation with what's really happening with IT. Anthropic, the global artificial intelligence developer, has come out with some new offerings, and that has sparked concerns over another AI-led disruption. We've seen sharp cuts across the AI basket overnight, and even this morning, all these frontline IT names, even some of the mid-cap names, are taking it on the chin. What is it according to you? Is it just a sentiment shock, a structural threat? How would you look at this news flow and the subsequent reaction, at least particularly for the Indian IT names?
Yeah, Nandita, I would say we don't know enough. There are a lot of companies which are getting very good valuations, which are helping, coding, and the first line of software being developed automated in an automated manner. So that disruption is definitely on. What I have been speaking to IT industry veterans, they are saying we will still be the go-to people for creating the applications to use all the infrastructure being put on. So they are still quite confident that there is a role for our IT service companies. But this kind of a disruption, we really don't understand much of it. Even the rating companies all are coming under cloud today, that so much data crunching can be done by these models. But whenever I try these models, they are hallucinating their data. You have to cross-check a lot again and again. So how good are these models? No bank is going to rush and give Anthropic their legacy systems to manage. Those will stay with our IT services company. Same with large airlines, large oil drillers or retailers. They are not going to move there. So this is a disruption coming by. Markets are very panicky, but I would say we don't understand enough, and I don't see this substituting. If I'm an enterprise and I'm buying software, I will not use an AI software to generate my code. I will want somebody who's responsible, who can service it. So that's my only reasoning. Again, a layman's reasoning. The industry veterans are not faced by this. I spoke to a couple of them last night when I saw this happening, and our ADRs were going down. So wait and watch. You can avoid the sector, one more disruption created, but I don't know how far and how deep it is.
Okay, we're still waiting for more details with respect to that, and you can avoid the sector. That's what Mr. Bagga has to say. But Ajay, we've had a lot to digest in a matter of 2 days. We didn't really have a weekend thanks to the budget. So, your thoughts and your verdict on the budget, because we haven't really conversed after that. And B, post-trade deal, do you think exporters, textiles, apparels, all these sectors are ripe for investment now that the father of all the deals, of course we did have that mother of all deals, EU deal, and father of all deals, US deal. So post these two deals, do you see a very, very strong case emerging for those beaten down export oriented sectors?
Yeah, I think so. I think very much there. But given what Trump is, the way he threatens Korea with 25, he threatens Japan. So, and the way he went back on the NAFTA and then his own signed deal. Again, in his second term, he went back on his deal with Canada and Mexico. So even it's not sacrosanct once it's signed. It will be a source of anxiety and risk for the markets continuously. What has happened is that Trump has come on the negotiation table. He's put down his cards. Most of them are unacceptable to India, like removing Russian oil completely or opening up zero tariff agri products. I don't think that's going to happen. So the reality will be somewhere in between. We have been measured, we have been polite, we have been firm but polite continuously, and we have stuck to our negotiation position. So let's see, in the next couple of days, we will get some joint statement that will help the markets. But definitely, one very big overhang for the markets has been removed partially, and that's why we saw the breakout, but we didn't see follow through that strongly. So that is waiting, but that's given you an idea what can happen. So I would say don't bet against India right now. That much has come through quite clearly. Our negotiation pattern has worked out well. But this will come. 18 will come eventually. Let's see what all we have to give up in return. Indian government will work it out. That is coming out clearly.
And what about the budget? That STT hike came as a big disappointment. I think this is key reason that we saw such a sharp slide coming through on budget day itself. But that aside, what is your verdict, and any other key disappointments aside of that STT hike that of course the market didn't take too well to it, but your verdict really on the budget?
No, the government speechwriters should be fired. It was more a cut paste from various, ministries. And you're talking about Uttarakhand eco trails and 10,000 guides in the same breath as 12 lakh 20,000 crores for infrastructure. So priorities were warped. And it's, H.M. Patel did an 800-word budget in 77. You don't need to make it a 1.5 hour budget and talk about every minor detail while missing out the big things. I think the enhanced layout on defense, the continued focus on infrastructure, welfare measures getting 10 lakh crores. I would have done a priority-wise budget. The PR lacked. It was a very nice budget, overall well done. STT, again, it matters for very few people. And the bureaucracy still looks on the stock market as a gambler's den. That's the unfortunate part. It's not being seen for what it is. It's generating now 50-60,000 crores just by STT. You add on the GST, stamp duties, all other charges, plus LTCG, STCG. The stock market generates a big chunk for the government, but that respect is lacking. So that's a message out for the stock market leaders that they need to do better PR with the government circles so that people understand the role of the stock markets. So STT got absorbed. I think by Monday only we saw that happening, and then the trade deal helped. Let's see what the volume impact will be. I think 15-20% volume impact will come in. Arbitrage funds will lose some amount of returns. So it is a drag. Definitely, it's a drag. Nothing happening for attracting foreign capital. That was a disappointment. And I would say the biggest would be if I was the FM, I would have taken out 2 lakh crores wherever you find it or you do extra borrowings and put it behind consumption. So some boost for consumption was needed because what is the underlying issue? It's aggregate demand. And only RBI can't do the heavy lifting. It's got a problem with rupee. I think consumption got missed out. Maybe with the next finance commission, they are looking at something. I don't know. But I think that was missed out. Again, politicians know, Nandita, that we as voters have very short memories. So your 28 and 29 budget will be landmark budgets. So if you have to invest in stocks, go ahead and do it, knowing fully well that 28, 29 will be blockbuster budgets. They are not wasting arsenal on 26 and 27. I think that's the big message.
Okay. Okay, so you also pointed out that consumption got missed, right? If one were to look at a portfolio reset, should it be more capex heavy, manufacturing driven right now? Then in that case, because they've already done GST last year, so
but there is no driver as such. You need more money in people's pockets. So be it standard deduction increase, increasing that 12 lakh, it should be a creeping increase. You should not wait and then all of a sudden do such things. GST cut is done and dusted. That impact is already there. But still, you have an output gap in the economy of more than 20%. So if India can produce 100 units, you're producing 74, 75. You can't export to the world, and you don't have consumption domestically. That is the big thing. So I would have looked at sector by sector and brought in something, tweaked the GST. Maybe they'll do it extra budget. So we don't know if it's as clear to all of us. I'm sure the wiser people sitting in government would have understood it also. So maybe this is step 1 and step 2 comes. Let's see what RBI does. There is a crying need for liquidity in the markets. Liquidity is getting sucked out also by the RBI action on protecting the rupee. That is taking out rupee liquidity. They have put in 9 lakh crores already this year. More will be needed. So maybe a CRR cut, SLR cut to put more money in bankers' hands to lend more so that the whole cycle get some lubrication. That's needed. So that aggregate demand is what I'm worried about. Supply side, we have done enough and more. I think aggregate demand is the issue.
Okay. All right. Got your point. Of course, as you mentioned, consumption got overlooked. But 2028 and 2029, according to you, would be blockbuster budgets to watch out for. With that, Ajay, I would like to thank you. Thanks a lot for waiting by patiently, and of course, your perspective always appreciated. And I look forward to more conversations as well going forward.
My pleasure, totally. And please call me more often. It's always very cerebral to talk to you. So you bring out good points as well. So makes me think.
Good to know. That's why we get up and come to work to do a good job of it, right? Thanks a lot, Ajay. Always a pleasure, and keep these compliments coming as well. I'm not complaining.
Yeah. Okay. Thank you.
Thank you. Well, on that note, let's take a look at the market. We'll of course be focusing in on the MC hot list as well. The exclusive story that my colleague has done, we'll bring her on board. But for the market, Sensex has now dropped into the red once again. flat, no big cuts really, but Nifty is also come off slightly up just about 29 points or so, but the mid cap index is going okay. It's also gaining 0.2%. The breadth of the market has improved quite a lot. 5:2, that's the NSE advanced decline ratio. So yes, portfolios would be looking much better today. In fact, not much better. Yesterday as well it was looking good, but today as well it's looking much better. But let's bring on board then my colleague on our MC hot list segment. All right, the MC hot list segment that we were waiting for quite some time. In fact, my colleague Hamsini has been waiting by for quite some time. Hamsini Karthik joins us. Hamsini, you did a exclusive story on Religare. Take us through what it's about, and of course we can take us through the exclusive story that you broken last evening.
Sure. So basically, Religare seems to have put back up on frame the kind of plans that it had with its with its health insurance arm. Religare is in the process of looking at a demerger and a spin-off for its health insurance arm. The business is said to be valued at about 16,000 crore. Religare holds 64% stake in the business, and it also is one of the very significant corporate action from Religare if it goes through, which we're told should happen in a couple of days from today. Why is it significant? Because it would possibly mark the first major transaction from the Religare group ever since the Burman family got into play there. Just to recall, Religare used to be one of the flagship entities of the erstwhile promoters of Ranbaxy, Malvinder and Shivinder brothers, Malvinder and Shivinder Singh brothers. They went through a battle in terms of legal disputes, instances of frauds, etc. And Religare went out of their hands. They depromoterized themselves in 2018. And since then, gradually we've seen the Dabur family enter the fray, and they took charge, they took control entirely in somewhere in early 2025. Ever since that happened, there has been talks of listing the health insurance arm. It's also one of the most profitable businesses for the group. And it holds a reasonably decent share, especially in a space where Star Health has the maximum foothold. Star Health at one point in time used to command over 50% of market share. That has come down over a period of time. But among the notable player, one of them is Care Healthcare as well. So it's an important subsidiary for the Religare group, and they're looking at some sort of a corporate restructuring and a listing in eventual course. Mind you, a listing will be important for another reason, because two of the public sector banks are other investors in the entity. Of course, they hold much lower minority stake compared to the promoter group. But given all those reasons, yes, a listing is something which has been in the anvil for a while, and we're told that it's likely to happen not through a typical IPO process, but through a corporate restructuring process sometime soon. As early as the end of the fiscal is what we're told to watch out for.
Okay, as early as the end of this fiscal, and not through the IPO route, through the corporate restructuring route. That's what you're saying.
Exactly.
Okay, Hamsini, lovely. Great, news break. Of course, our viewers can log on to moneycontrol.com and read the entire article that in the exclusive article, an exclusive story that Hamsini broke last evening. Hamsini, keep these stories coming in. We'll of course get you on our shows and get you to talk about them as well. Thanks a lot for joining in, Hamsini. It was a pleasure seeing your face early in the morning.
Thank you.
Okay, take a look at the market. Take a look at the market then. The Nifty up 50 now, so it's fairly volatile this morning. 50 to 870 point range that we are moving in right now. Mid cap index, holding out firm. Bank Nifty has picked up pace as well. But I just want to point out some of the movers from the broader end of the market because we haven't really done that this morning. I want to take a look at Lloyd's Metals. That stock is up somewhere around 13%. Metal pack itself was buoyant. The metal index was the top sectoral gainer this morning. Reliance Power is the other one that's up almost 8%. You have Reliance, JBM Auto, I beg your pardon, that's up 7.5%. MRPL, the entire energy basket is also fairly buoyant. ONGC is the top Nifty gainer. MRPL is also up somewhere around 5%. Exide Industries has had an upgrade from a brokerage. That stock is also up 4.5%. You have Chennai Petro, even GE Vernova for that matter, up 4%. NMDC up. Dixon Technologies, that stock is also up 3.5%. JK Tyre up almost 3.5%. All these OMCs are also pretty active today. IOC, I can see it's up 3%. On the downside, e-clerks, of course, mid-cap IT, and in fact the entire IT basket is taking it on the chin on the back of the potential AI disruption due to Anthropic announcing new products on the AI front. That's weighing in on sentiment when it comes to IT stocks. Aside of that, you have Philips Carbon Black. That stock is down almost 7%. Some profit taking coming through on some of the defense names as well. Hindustan Aeronautics is down over 6%. Most of these Nifty 500 laggards are from the IT space. You have Happiest Minds, you have Emphasis, all of these stocks are down anywhere between 4 to 8% or so. So yes, the mid-cap IT, in fact the entire IT pack is sulking in trade, although on the index level we are holding on to gains. There are other pockets that are lending support, the likes of metals, energy, these stocks are buoyant, and even Reliance Industries, that stock was up somewhere around 1.5% last time I checked. So all in all, it is a topsy-turvy day, turning out to be that only. But right now we are trading with gains of somewhere around 50 points on the index. With that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. But stay tuned to Moneycontrol for all your other news and updates. And of course, watch out for Closing Bell with my colleague Lavisha Darad at 3 p.m. Don't forget to tune in for that. Thank you for watching.